Moody's changes the outlook on Nigeria's ratings to negative from stable and, of course, affirms the B2 ratings. Foreigners dumped nearly $10 billion of South Africa's assets in 2019. And Uganda plans to borrow 600 million euros to plug budget gap. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwago. We'll get the show started with the markets at intraday trading here on African continent. Look quite quiet amongst the markets we track here in Africa. The Nigerian stock index was marginally up 0.01%, led by the oil and gas and consumer goods sectors. The JSE index in South Africa was down 0.14%. In Egypt, the EGX 30 was up, but marginally at 0.08%. In the meantime, Kenya closed negative on Wednesday. In the Gulf region, mixed sentiments were observed at intraday. While the markets in the UAE were down, other markets were sunny side. Abu Dhabi and the Dubai markets were both down 0.03% at intraday. The Qatari index was up 0.84%, while Saudi Arabia went up 0.31%. In Europe, stocks moved higher in the morning as investors monitored U.S.-China trade data releases and, of course, OPEC meeting. But let's start the conversation with Chelsea on the data front. Hello, Chelsea. Good afternoon. Well, Germany's factories saw an unexpected drop in demand in October. Does this new data indicate Germany's manufacturing sector isn't on the rebound like many had hoped?
It's certainly a blow to these hopes that have arisen over the past several weeks that the manufacturing sector was really finding its footing. This really started about a month ago with the previous industrial orders report, which showed a pretty strong increase in orders in the manufacturing sector. That was also mirrored by other data, particularly sentiment data, so how businesses were feeling about the future. A lot of that data had also been quite positive over the past couple of weeks. All of that is really being thrown into question with today's report, which showed as you said, an unexpected decline in factory orders for October. And it's really, from the details of this report, it's pretty broad-based. So a big decline in demand domestically, so from here in Germany, but also continued declines in orders from non-EU countries. So that's likely being driven by some of these trade tensions that are weighing on global trade and economic growth. Brexit remains an overhang for the German export machine, and so a lot of different headwinds for the manufacturing sector. And another report today for November, factory orders from a think tank also seem to indicate that the decline is going to extend into November at the least. So it doesn't look like there's really a turnaround yet in the manufacturing sector.
Now, in corporate news, Deutsche Telekom says it will freeze all new orders as it waits for more political clarity on the use of equipment from Chinese supplier Huawei. Could this slow Germany's 5G rollout?
That's certainly going to be a concern over as this plays out. So Deutsche Telekom has been one of the leaders of the 5G rollout here in Germany. They were one of the biggest winners of 5G spectrum in the latest auction here in Germany. So there's a lot of hope riding on their ability to really get going on 5G. The reason why they're stalling right now on buying equipment, not only from Huawei, but from all of their suppliers, is because there's really no clarity within the German government about whether they're going to allow Huawei to be in their equipment to be used in the 5G rollout over the next couple of months. And Deutsche Telekom is also struggling with uncertainty in the U.S., where they're trying to merge their T-Mobile unit, and so they're afraid that if they use Huawei equipment, that could sort of upend or disrupt that merger merger. So they're definitely going to be sitting it out. They did mention while making this announcement that they're going to be freezing orders, that it could really put them behind. And Germany has already sort of been lagging the U.S. and Asia in a 5G rollout. So this could certainly be a further drag on the rollout.
And Saudi Arabia unveiled the final price for shares in its IPO today. How successful has the oil firm been in pitching this offering to international investors?
So Saudi Aramco had really hoped to draw international investors with this offering. And they, from all accounts, it doesn't seem like they really were able to do that. They definitely have seen a lot of interest. The IPO is still expected to raise a little over $25 billion. It's expected to be the largest IPO ever still. It's expected to make Saudi Aramco the most valuable company in the world. But there have been a lot of signs that international investors just weren't interested in this. Saudi Aramco canceled their roadshow where they were going to be pitching this IPO in Europe and the US last month because they sort of had seen interest dry up from the international community. But they also, at the same time, are still seeing quite strong demand. They saw a lot of demand from regional investors in the Middle East, so sort of sovereign wealth funds from the UAE, from Kuwait. They all were investing really billions of dollars into this IPO. So they may not have been successful in attracting this international investor base, but they certainly have seen a lot of interest, at least on the regional level.
All right, Chelsea, thank you for updating us. Enjoy the rest of the day.